Welcome to News 7 Crypto. Please subscribe our channel. Bitcoin reserve risk metric approaches all-time lows. Data shows the Bitcoin reserve risk indicator has recently plunged down and is now reaching all-time lows only seen back in 2015 bear and the March 2020 COVID crash. Bitcoin reserve risk suggests hodling relative to price is strong. According to the latest weekly report from Glassnode, BTC investors have been holding strong onto their coins despite the large decline in the crypto's price recently. Before looking at what the reserve risk indicator does, it's best to get an understanding of a couple concepts first. A coin day is accumulated in the market for each one BTC that stays unmoved for a day. The sum of such coin days in the entire market can tell us about how dormant the long-term holder supply has been. Because of this, the sum of coin days can be an effective way of measuring the conviction of hodlers in the Bitcoin market. However, there is another way to interpret the coin days and hence the LTH conviction, as Glassnode explains. Stronger hands will resist the temptation to sell and this collective action builds up an opportunity cost. Everyday hodlers actively decide not to sell increases the cumulative unspent opportunity cost, called the hodl bank. The other idea of interest here is the incentive that these LTHs have to sell right now. It is measured through the current price of Bitcoin. Whenever the price goes up, hodlers become increasingly tempted to realize their profits, and hence the incentive to sell goes up. Now, the reserve risk models the ratio between this incentive to sell and the cumulative opportunity cost, explained above, of the long-term hodlers. Below is the chart for the indicator. The value of the indicator seems to have sharply declined recently. Source: Glassnode's The Week on Chain, Week 26, 2022. As you can see in the above graph, the Bitcoin reserve risk has gone down in recent days and is now approaching all-time lows. This suggests that despite the plunging price of the coin during 2022, BTC investors have still been holding strong onto their coins. The last time such low values of the metric were observed was back in the late 2015 bear market and the March 2020 crash. BTC price. At the time of writing, Bitcoin's price floats around $20.9 thousand, down 1% in the past week. Over the last month, the coin has lost 27% in value. The below chart shows the trend in the value of the crypto over the past 5 days. Looks like the price of BTC has been consolidating sideways recently. Ethereum plugs 11-week bleed, why $1,500 may be on the horizon. Ethereum has been closing red week after red week for the past 11 weeks. It is the longest red streak that has been recorded in the history of the cryptocurrency, hence, it carried significant implications for the digital asset. Through the decline, it has been one of the worst hit coins, performing poorly compared to the other cryptocurrencies at this time. However, the digital asset has now closed its first weekly green candle in 3 months and things are looking up. Better days ahead. With this recovery has come a renewed interest in the digital asset. Coupled with the fact that the digital asset is now trading above its 50-day moving average, it has now solidified a bull trend for the short term. The activity on the network, though reduced, remains high enough to strike renewed faith in the heart of investors. However, there are still things that threaten the price of the cryptocurrency going on another bull rally. The Celsius debacle had been one of the major reasons behind the drawdown below $1,000 and remains a very real threat. The lending protocol, which has found itself in a tight spot due to some bad trades, remains at risk of being liquidated, and rumors continue to circulate that Celsius is planning to file for bankruptcy, which would mean users would not be able to get their tokens back. ETH price sees first green weekly close after 3 months. Source: ETH used on TradingView. Additionally, Three Arrows Capital's insolvency had hit the market hard, but there is still more to come. This is because it is the leading crypto fund and as such had its hand in a large number of projects in the space, especially DeFi, the majority of which would be significantly affected by the 3AC insolvency. Ethereum to $1,500. Presently, the price of the digital asset is still trailing $1,200, but there are some things rumored in the market that will likely promote a pump in price. One of these is FTX's supposed acquisition of the trading platform, Robinhood. Now, Robinhood is one of the most popular platforms when it comes to trading crypto. However, it has drawn the ire of the community in the past due to its practices. As such, if it were to be acquired by FTX, a trusted crypto exchange, it would mean that FTX would be bringing Robinhood's massive user base of more than 22 million to the broader crypto community. There is nothing definite regarding the acquisition yet, but the sentiment among investors regarding it has been good so far. A rally resulting from such an acquisition could easily see Ethereum grow more than 20%, and that would put the digital asset above the $1,500 level once more. ETH is trading at $1,221 at the time of this ring. It remains the second largest cryptocurrency in the space with a market cap of $148 billion. Thanks for watching. Please subscribe our channel and click the bell icon for more news update.